Good morning, good afternoon, or good evening to everyone connected from all over the world. Welcome to the Generali and UNDP event launching our joint report, Parametric Insurance to Build Financial Resilience. Today, we are broadcasting live from the Generali headquarters in Milan, and it's my pleasure to open this talk. Our speakers and panelists will explore parametric insurance and its potential to close the protection gap. Now, I would like to invite Simone Bemporad, Generali Group Chief Communications and Public Affairs Officer, to join us on stage. Thank you and enjoy the event.
Good day, everybody. It is an honor for me to welcome you today, the UNDP, the IDF, all our speakers, as well as all the contributors to this important report, our colleagues, and of course, everyone connected online. We know that insurance has the power to make a real impact in addressing the growing risks and losses from climate change, which are consistently less predictable and more devastating. It is therefore our duty as a responsible insurer, investor, employer, and corporate citizen to act for the common good and work to build a more resilient and just society worldwide. This is a strong commitment to a vision of a better future for all that is fully shared by Generali and the UNDP, leading to our public-private partnership, which started in 2022 with the aim to together strengthen the resilience of the world's most vulnerable communities by expanding their access to insurance solutions. The publication of today's report is a further step in this partnership. It advocates for parametric insurance as a concrete tool to help us make significant progress towards closing the insurance protection gap globally, in line with the United Nations overall Sustainable Development Goals and the 2030 Agenda. During the event, we will hear how parametric insurance, which offers pre-agreed payouts based on specific trigger events measured by a parameter or index, can concretely contribute to building higher resilience and achieving economic sustainability, particularly in vulnerable communities. I would now like to kick us off with a video that explains this in more detail.
Global challenges and risks are rising. While no corner of the world is untouched, developing countries and communities are disproportionately impacted. Generali, in partnership with the United Nations Development Programme, is working to protect vulnerable communities around the world. How? By leveraging the potential of a swift and effective insurance solution designed to financially protect vulnerable communities when risks, hazards, and shocks strike. Through the potential of parametric insurance. Unlike traditional insurance, which requires a loss to occur, parametric policies are triggered by specific events, like a certain amount of rainfall or the magnitude of an earthquake. Leveraging new technologies and improved data accuracy to assess an event's intensity. Once the threshold is met, quick payouts allow faster recovery for affected communities. By providing immediate financial relief, parametric insurance can help bridge the financial protection gap and promote long-term sustainability. It's about more than just mitigating risks. It's about creating opportunities for positive change and building global financial resilience. Together, we can navigate a world of rising risks and protect the future.
Hello everyone, buongiorno a tutti. I'm here to talk on behalf of the Italian Ministry of Economy and Finance. The images of floods, wildfires, and earthquakes we've just seen at the beginning of the video are becoming all too familiar, impacting our own lives and economies with increasing frequency and severity. This is also happening in Italy. Just last week, storm bodies brought severe flooding to Emilia-Romagna, a region that was already reeling from the effects of devastating flooding a year ago. What once seemed exceptional is now disturbingly routine. As governments, we're acknowledging how crucial it is to recognize such events as part of a systemic challenge, one that requires a comprehensive, forward-thinking approach. We cannot afford inaction. 2023 marked a grim milestone, as it became the costliest year in history due to natural disasters. Aside from the immediate devastation brought by such events, we must also account for their long-term economic impacts. These include disrupted markets, hindered development, and growing strains on public finances. Traditional government-exposed interventions, while essential, are insufficient to cover the scale of damage and recovery needed after major events. But there is a powerful financial tool that is already being used by many to manage these risks, and this is insurance. Insurance serves as a critical backstop in pricing and managing risks. In the face of escalating climate threats, it is therefore more important than ever. However, we're very well aware how in many countries insurance coverage remains still very inadequate. In Italy, only 6% of homes are insured against earthquakes and floods, and a mere 5% of businesses carry insurance against the same risks. This gap leaves a vast portion of the population vulnerable to the financial and social consequences of natural disasters, what is known as a large protection gap. And while insurance companies play a critical role in providing protection, very often their ability to offer widespread coverage can be hampered by challenges in affordability, availability, and risk assessment. This makes a clear case for collaboration between public and private institutions to protect people and assets in the event of natural hazards. Recognizing this need, the Italian G7 presidency, with the support of the OECD and the International Association of Insurance Supervisors, has developed a high-level framework for public-private insurance programs against natural hazards. This framework has been welcomed by G7 finance ministers, central bank governors, as well as by G7 leaders. The framework aims to guide policymakers in developing public-private insurance programs, or PPIPs, for disaster risk finance. It is structured around three core parts. One, assessing exposure to natural hazards and identifying existing protection gaps. Two, addressing these gaps with a mix of solutions, which include PPIPs that leverage the resources and expertise of both public and private sectors. Three, illustrating the steps needed to design and implement PPIPs. PPIPs offer a valuable tool in closing the protection gap, as they encourage collaboration between governments and insurers, providing solutions that make insurance more affordable and accessible. They also foster regional cooperation in managing natural hazard risks and enable stakeholders to leverage advanced technologies for better risk assessment and data collection. In line with these G7 developments, this is also a very important year for our own Italian insurance system. In fact, the Italian budget law approved last year foresees the introduction of the first national insurance system covering natural catastrophic risks. This system, which is now being operationalized, will be based on a public-private partnership which aims at filling the insurance protection gap, enhance damage management efficiency, and reduce impacts on public finances. Once implemented, the system will mandate all enterprises to secure insurance against the most critical natural catastrophes, earthquakes, floods, and landslides. To support this, SACE, our expert credit agency, will provide a partial coverage of potential losses for insurers. Dear listeners, at the recent conference organized by ANIA, the Italian Association for Insurances in Rome, a key takeaway was the importance of rebuilding with resilience in mind. After disasters, it's essential to reflect on what went wrong and how we can better prepare businesses and households for the future. Resilience is indeed critical. We can no longer afford to react to disasters as they come. We need long-term strategies to prepare, to respond, and to rebuild. This means not only making insurance, traditional insurance, more accessible and affordable, but also embracing innovative solutions like parametric insurance. Today's event highlights why parametric insurance is vital for strengthening resilience and for ensuring long-term economic stability.
especially for our most vulnerable communities. We will now have a chance to hear directly from Generali on how parametric policies can function best for improving the resilience of our societies and for coping with the increasing challenges we're facing. Thank you very much for your attention.
Thank you, Silvia. Good afternoon, everybody. It's a great opportunity to speak to you today on a topic of increasing global relevance, how insurance, particularly parametric coverage, can be leveraged to enhance sustainability and tackle the pressing challenges of climate change. In the ongoing discourse around climate change, insurance is often overlooked as a critical tool in building resilience. However, as the frequency and intensity of natural disasters continue to rise, driven by climate change, insurance must move to the forefront of our strategy. Traditional insurance models are invaluable, but they can be slow to respond, leaving communities and businesses vulnerable in the immediate aftermath of disasters. This is where parametric insurance comes into play. Unlike traditional insurance, which compensates based on the actual loss suffered, parametric insurance triggers a payout based on pre-agreed parameters, such as rainfall levels, wind speeds, or earthquake magnitude. This quick response capability allows for a more agile and effective financial tool that can mitigate the immediate economic impact of climate-related events, enabling quicker recovery and ultimately greater sustainability. At Generali, we recognize that insurance isn't just about covering losses, it's about fostering resilience, particularly in underinsured communities that are most vulnerable to climate change. These communities often lack the financial buffers to recover quickly from extreme weather events, pushing them further into poverty. This is why Generali Global Corporate Commercial, together with our partner Descartes Underwriting, is committed to offering parametric insurance, an innovative solution that can provide immediate relief and faster payouts in the face of natural hazard. We are constantly seeking new ways to close the protection gap and ensure that these at-risk communities are not left behind. Today, I am pleased to present a comprehensive report realized in partnership with UNDP and other important players in our sector, and you will listen their voice in the following roundtable, that outlines how parametric insurance can be used efficiently to tackle the challenges of climate change. Our report delves into the specific ways this innovative insurance model can reduce financial vulnerability and provide rapid liquidity when it's needed most. By offering protection based on clear, objective data triggers, parametric insurance avoids lengthy claims processes, making it an efficient solution that complements traditional coverages. This joint report is a testament to our belief that the future of insurance must be proactive and data-driven, especially in the face of increasingly unpredictable climate patterns. At Generali Global Corporate Commercial, we are proud to be a center of excellence for parametric insurance for the group. We have been developing expertise in combining traditional and parametric coverages, offering holistic solutions that cater to the specific needs of our clients. While traditional insurance addresses long-term recovery, parametric insurance provides an immediate financial response, ensuring that business and communities can stabilize quickly after a catastrophe. Our dual but also combined approach offers unparalleled flexibility and resilience in the face of increasing climate risk, ensuring that our clients are prepared not only for recovery, but also for continuity. However, we must also acknowledge that parametric insurance is not without its challenges and constraints. One of the key hurdles is basis risk. The risk that the payout does not perfectly match the actual loss suffered. While parametric insurance is designed to offer immediate relief, there may be instances where the triggered event does not fully capture the extent of the damage, leaving policyholders feeling underserved. Additionally, access to accurate and reliable data is essential for setting appropriate triggers, and in some regions, this data may be scarce or incomplete. There are also regulatory and legal considerations, as some markets may not yet have the frameworks in place to support widespread adoption of parametric solutions. That said, these challenges are not insurmountable. By continuing to invest in technology, data collection, and collaborative partnership, we can overcome these barriers and make parametric insurance an integral part of climate resilience strategies worldwide. I would like to close by saying that parametric insurance offers a powerful, innovative tool for addressing the challenges of climate change. At Generali, in partnership with UNDP, we are committed to using this tool to strengthen the resilience of underinsured communities, enhance sustainability, and ensure faster recovery from climate-related disaster. While challenges remain, we are confident that with continued innovation, collaboration, and a forward-thinking approach, insurance can play a pivotal role in safeguarding our future against the risk of a changing climate. Thanks for your attention. I hand over now to UNDP.
Hello, and thank you everybody for joining us today. I would especially like to thank Generali for hosting us. It is my great pleasure to be part of this collaboration between the development world and the insurance industry. In a world of increasing risks, where we see the impact of climatic and geological risks affecting countries, communities, businesses, and households, the investments needed towards social and economic progress, the efforts to increase the resources allocated towards a just climate transition, and all the efforts from individuals, from governments, to build prosperity could easily be wiped out in face of the unexpected. We are convinced that the development world cannot continue without accessing the appropriate tools for risk management and coherently building financial resilience, in particular in developing countries. We know that without financial resilience, development is not sustainable. And it is exactly in this point where from the United Nations Development Programme, we see the importance to collaborate and strengthen the engagement with the insurance industry, to tap on the knowledge and expertise that insurers have developed over the past decades to address the financial resilience of our societies. This partnership with Generali is unique in the ways that we jointly work to develop tools, knowledge, and approaches that strengthen the contributions of insurance to the development agenda. How both organizations have been learning from each other to drive a bolder ambition towards financial resilience. Also, in our commitment and engagement with Insurance Development Forum, we aim to build a bridge between the experience and capacity of the global insurance industry and UNDP's unique position in coordinating the achievement of the sustainable goals. Additionally, the close work on the ground with governments, private sector, and civil society allows us to find solutions to the pressing challenges of today's world. The work that we're presenting today tries to build awareness around the contributions that an innovative solution such as parametric insurance can provide to better access management tools to face the risks that we face today. Despite the fact that parametric insurance has been widely used in agricultural insurance in the developing world for several years now, further applications remain unknown. Each of the examples in the document explores and gives us insights and inspiration about how insurance can further be used to face the risk that businesses, communities, and governments face. I believe this document helps us all to learn more about parametric insurance, to push the frontiers and how insurance can contribute to protect the development agenda, and in particular, to show how the insurance industry is a unique and essential partner in the achievement of the Sustainable Development Goals. Therefore, this is a call to action, to deepen the collaboration between the insurance industry and the businesses, communities, and governments that are currently looking for effective, innovative mechanisms to reduce their vulnerability to the growing risks that threaten our future. Today, we have an opportunity to exchange and learn. Yet, we have homework to do. We need to keep thinking about how to build the evidence around the impact of insurance in protecting our future. We still need to build evaluation frameworks that allow governments to understand how these products are contributing to the public policy agenda. We need to find realistic and practical approaches to assess insurance programs and how to keep nurturing these conversations to improve and scale up insurance protection. I believe that together, we have a duty to protect each step forward in the achievement of the development agenda, to guarantee that there's no step back and that we all experience this peace of mind that insurance provides. Let's keep working on the ambition of this partnership and build on the reflections and insights of this document. Let's enjoy the conversations today, and hopefully we will have many more chances to share the lessons and experience of all of us in this path. Thank you very much.
thank you to all the previous speakers, and welcome again to all our guests joining us for this event. The Insurance Development Forum, which is the institution that I'm representing here, is a public-private partnership led by the insurance industry and supported by international organizations. I'm particularly pleased to be here today representing this institution, which is co-chaired by the United Nations Development Programme and the World Bank Group. As our mission, it is to optimize and extend the use of insurance and related risk management capabilities to build greater resilience and protection for people, communities, businesses, and public institutions that are vulnerable to disasters and their associated economic shocks. I'm particularly pleased because of the launch of this report by Generali and UNDP on parametric insurance to build financial resilience. I really want to congratulate both parties and the various private sector actors, including members of the Insurance Development Forum, for their contributions to this endeavor, which is timely for all the reasons the earlier speakers had elucidated upon. Over the next 30+ minutes, we will spend some time delving into the rationale for this report. And we've heard quite a bit about that from the earlier speakers. We will also use the next few minutes to gain some key insights into the findings in the report, but most importantly, to delve into specific case studies demonstrating how parametric insurance is being leveraged in a variety of contexts. With that, I would like to invite Dr. Alessandro Bonazzi, Generali Global Corporate and Commercial's Head of Technical Excellence, and also Lauren Carter, Deputy Team Lead and Head of External Engagement, Insurance and Risk Finance Facility at UNDP, to provide some initial framing thoughts. Over to you, Alessandro.
Hello, everyone. It's a pleasure for me to be here and to share some insight from our joint report that as Generali Global Corporate and Commercial we developed with UNDP over the last month. Before starting, I'd like to remind you that our joint report is available online, and you can also download it with the QR code you see now on screen. But let's start by looking at what is happening around us. We are all observing the increase in frequency and severity of climate-related events. Just recently, Storm Boris in Europe brought extreme floods to several European countries, including Italy. Hurricane Helene made landfall as a Category 4 hurricane in Florida, bringing devastating losses due to wind and floods across several US states. Large part of Africa and Central and Western Africa have seen heavy flooding over the summer due to unusually intense rainy season, unleashing more humanitarian crises. Innovative solutions and joint efforts are essential to address these challenges. Given the complexity of the problem, no single solution or organization can do it alone. Rather, we need to change how we collectively operate and partner together to unlock a greater potential. In this spirit, Generali signed a partnership with UNDP, and since then we have all been challenged to think our own work can contribute to the achievement of the Sustainable Development Goals. At Generali GCNC, we embraced the challenge and together with the UNDP began working on the report we are releasing today. This report explains how parametric insurance is proving to be an effective tool to support the financial resilience. Explain is the key word here. We aim to provide a balanced description of the pros and cons of parametric insurance in the context of sustainable development, offering real-world examples of how it can indeed be a useful tool. Unlike traditional insurance, which reimburses for actual losses, parametric provides payouts based on a predefined parameter or index, such as wind speed, rainfall amount, earthquake intensity. For example, if a hurricane with a wind speed exceeding 150 km/h hits a specific area, the policyholder receives quickly a payout according to a pre-agreed formula that is typically defined on a percentage of the total insured limit. The principle of insurance, anyhow, remains unchanged. It starts with an insurable interest and a need to protect it against losses. However, the mechanics of parametric insurance open up a new possibility that otherwise will be out of reach, while also providing new challenges for both the insurers and the insured. One of the key benefits, as we have been reminded today, is speed, providing quick payouts that are crucial for immediate disaster relief. The predefined trigger makes the process clear and straightforward, enhancing transparency. Interestingly, some use cases in the report highlight how parametric insurance can be triggered even before the negative effects of the insured events are even felt. For example, a payout could be triggered in the middle of the agricultural season, just at the end of sowing, becoming an effective proactive mechanism to protect livelihood and avoid negative coping strategies. Additionally, parametric can cover risks that typically are excluded, such as non-damage business interruption, and can also work, that is, in areas and markets where there is not yet a mature insurance infrastructure, where maybe there's a lack of agents, loss adjuster, and risk engineers. No solution is perfect. Basis risk is a significant concern, as there is the possibility that the payout does not perfectly match the actual loss experienced. That means that determining the right parameters and trigger can be challenging, adding complexity. That is where the very strong technical capabilities are needed to navigate and solve the complexity and improve the overall product. At GCNC, we are proud of our collaboration with Descartes Underwriting that is supporting us with solid modeling capabilities and truly innovative approaches. Finally, the role of the end user is also crucial, and the report serves as a user guide for those considering parametric insurance, which can indeed can be a daunting task. It provides a checklist outlining the steps that governments, businesses, and communities should consider. These steps range from recognizing the risk and the current protection tool to the understanding of the due diligence and the claim process performed by the insurer. In short, the aim of the paper is to clarify parametric insurance and make it more accessible to organizations that could integrate it in a broader risk management strategy. But enough from me. Doreen, what is the perspective of UNDP?
Thank you, Alessandro. Parametric insurance is particularly valuable for vulnerable communities because it offers timely financial aid, which facilitates rapid recovery from increasingly frequent climate risks, including acute events such as hurricanes and floods, as well as chronic events such as prolonged drought. It can also protect against non-climate risks such as earthquakes, as well as health crises such as a pandemic or an epidemic. At the UN, we have seen that rising and intersecting risks from climate change, health crises, escalating conflict, and environmental degradation have caused human development to stagnate and even decline in recent years. And this has shown us that actually without financial resilience, development is not sustainable. And as such, parametric insurance can contribute to achieving and safeguarding progress on all 17 Sustainable Development Goals. Some of the key highlights from the report is that it provides tangible examples of how parametric insurance can support the Sustainable Development Goals, as well as timely and practical insights and tools for governments and businesses and other organizations interested in adopting parametric insurance solutions. A checklist for organizations, including parametric insurance, cover identifying key economic sectors, understanding the specific risks that they face, evaluating data providers, customizing the claims process, and organizing claims payments. There's also a framework to measure the impact of parametric insurance policies to ensure that they're actually achieving their intended sustainability objectives. And perhaps most interestingly, there are 7 insurance industry case studies illustrating how parametric insurance solutions are successfully supporting the SDGs across various sectors. The report includes examples of how parametric insurance for drought, for example, can protect farmers in Malawi as well as livestock herders in Kyrgyzstan. This has a direct correlation to Sustainable Development Goals related to poverty, hunger, and climate. There's also examples of how parametric insurance can support the continuation of critical social services in Mexico by insuring buildings which support public health, pensions, and social security from earthquakes. This contributes to Sustainable Development Goals related to poverty, decent work and economic growth, as well as sustainable cities and communities. There's also an example of how to safeguard local livelihoods and communities that rely on tourism in French Polynesia by insuring a hotel against storm surges. This enables the hotel to stay operational and continue paying staff wages, which support Sustainable Development Goals related to poverty, climate action, and infrastructure. We'll hear shortly more on 3 other case studies from the report in depth, and you can see the full report for details on all 7 case studies. But most important about this report is the calls to action to create the right enabling environment, market conditions, and risk modeling for parametric insurance to close the $1.8 trillion protection gap. For example, governments can create a more supportive regulatory environment for the development and dissemination of parametric insurance products. Insurers can make sure that the products they develop support the Sustainable Development Goals and that these policies are scalable. And development actors, such as the UN, can help shape the ecosystem of supportive market functions, policies, and regulations, and support governments in developing effective payout management processes, which is critical to building back better after a disaster strikes. And policyholders can help raise awareness and ensure that the products are tailored to specific needs and help build and drive market growth. The report clearly outlines some of the ways in which stakeholders across the board can scale the adoption of parametric insurance and build financial resilience to rising risks. And with that, back to Echo Sway.
Thank you very much, Alessandra and Lauren, for that clear framing in terms of why this is so important. We're really at the frontier when we think about innovation and consider insurance solutions that are emerging to deal with a world that is particularly in flux. I mean, every day we pick up the newspapers and we see something about some impact of a disaster, as you've mentioned, Alessandro, but also a sense of uncertainty. And as you mentioned, Lauren, the value of the report is, of course, to offer a glimpse into the very practical programs and solutions that have been structured and the value that they're delivering to customers, be they sovereigns, businesses, development institutions, communities. And I think that that's invaluable. We also know that successful innovation requires a collaboration in terms of defining, refining, structuring. And there are, of course, lessons that we have to learn. And I really appreciated your reference to basis risk. How do you learn from these experiences to improve on these products? And that also helps in terms of driving the deployment when we think about the protection gap, which Lauren had referenced. So the report does provide these 7 case studies that offer that glimpse. But I want to spend the next few minutes getting a little bit deeper in depth into these case studies and giving us a very practical flavor in terms of what these programs look like. And so before getting into that, I just want to take a moment, speaking about collaboration, to also acknowledge the contributions made by a number of companies who furnished these case studies, and also with a view towards acknowledging that beyond the private sector actors, there are also numerous public sector actors who are involved in creating these programs and bringing them to market and also, again, delivering that value. So these companies are, of course, Generali Global Corporate and Commercial, in partnership with Descartes Underwriting, the African Risk Capacity, Blue Marble, Celsius Pro, Swiss Re, and WTW. So really thank you for your contributions. As was mentioned earlier, we've selected 3 case studies, and they are a case study that is focused on Fiji's first coral reef insurance program, covering tropical cyclone risk around 3 islands in the Lao seascape. Incredibly exciting when one thinks about nature. The second is, of course, income protection to women engaged in informal work in India, enabling them not to work during extreme heat conditions, thereby reducing health and economic risks. And for me, this is, again, particularly exciting when you think about communities that we would, at some point, think might not be accessible in terms of insurance solutions. And then the third case study is an insurance cover for a wind farm in Vietnam, and really offering a cover to provide coverage due to lack of wind production. So again, 3 very diverse case studies, but let's get practical in terms of how these programs are structured, what are some of the lessons that we are learning, and how are they delivering value. And so with that, I'd like to turn to Sarah Conway, who's the Director of Ecosystems Resilience Practice in WTW's Disaster Risk Finance team, to provide an overview of the Fiji Coral Reef Insurance Program. So over to you, Sarah.
Thanks so much, Echo Sway, and thanks also to Generali and UNDP for both the opportunity to contribute to this report and also to participate in today's event. WTW has really been at the forefront of the application of parametric insurance to support both ecosystems as well as the livelihoods that depend on those ecosystems. For example, we've designed and placed several coral reef insurance policies for coral reefs that are impacted by tropical cyclones. There is an especially strong payout use case here. Coral reef response is most successful if deployed within the first 30 to 60 days following a cyclone. In other words, the rapid payout that parametric insurance enables provides necessary liquidity within the time period in which other approaches, for example, trying to secure ex post grant-based funding, would be very difficult. The report features a coral reef tropical cyclone policy that we designed and placed to support a subset of islands in the Lao seascape of Fiji. Supported by BHP through social investment funds, WTW liaised closely with Vatuvara Foundation, the policyholder, and a local conservation organization committed to protecting Fiji's Northern Lao group through conservation as well as empowerment of local communities as stewards of their natural resources to create a fit-for-purpose parametric insurance product. The product uses a cat in nested circles or a gridded parametric structure, whereby payouts are based on the spatial distribution of event intensity across the covered geography. Put differently, the higher the maximum wind speed and the closer the tropical cyclone passes to the reef, the higher the payout amount. Should a triggering event occur, the payout will give immediate liquidity to Vatuvara Foundation to ensure that they can deploy a community-led, pre-developed reef response protocol. For example, to assess damage, to clean up debris, to reattach corals, and to support the nearby communities to alleviate any food and water security concerns caused by the cyclone. Working with WTW and local correspondent broker Insurance Holdings Pacific, Vatuvara Foundation chose the Pacific Regional Risk Pool, Pacific Catastrophe Risk Insurance Company, PICRIC, to provide the policy after a competitive placement process. We have supported similar coral reef programs for the Mesoamerican reef, working with the Mar Fund, and also for the reefs around Hawaii with the Nature Conservancy. Parametric insurance is really a game changer for ecosystems such as coral reefs, turning essentially a previously uninsurable asset into an insurable one. And it's not just coral reefs. In fact, there are a range of ways in which parametric insurance may be able to support ecosystems and the broader blue and green economies. Just to quickly highlight 3 broad categories of solutions for the blue economy. First, parametric insurance solutions that aim to support blue ecosystems directly, those that are ultimately underpinning the blue economy, so coral reefs, mangroves, seagrass, et cetera. Second, those that aim to support the businesses or livelihoods dependent on those ecosystems, the fisheries sector, the tourism industry. And third, those that aim to de-risk investments into the blue economy, linked to the issuance of blue bonds, either on their own or as part of a debt conversion or debt for nature swap. It's not a silver bullet, as other members have mentioned so far, but it is a really useful tool alongside risk reduction via conservation and resilience building. Thank you again for the opportunity to participate in this report and this event today, and back to you, Ekoswehi.
Thank you, Sarah. I have a million questions that I could ask, but we have a limited amount of time. But I really appreciated those 3 applications that you provided. I mean, nature is a big theme, considering climates, the devastating impact on ecosystems on not only small islands, but larger countries with huge coastlines, right, where you have millions of people that are dependent on the sea in terms of a source of livelihood. So I really appreciate that case study, but more questions to come. With that, I would now like to turn to Ariana Antunovic, who's parametric business developer at Celsius Pro, to provide some insights, as we mentioned earlier, into the income protection cover for informal workers in India. So over to you, Ariana.
Perfect. Thank you very much, and thank you for inviting me here. I'm very happy to be here and tell you more about the case study that we have submitted. So Global Parametrics, through our Natural Disaster Fund, together with Mahila Housing Trust, developed this meso-level parametric insurance product. And the product is aimed to providing quick financial support to women who are members of a credit cooperative in the state of Gujarat in India. So these women are often working in the informal sector, and they are the backbone of their families, the backbone of their communities. They're working in some very extreme conditions and often under very extreme stress conditions that put their health and lives into risk. So we are all aware that the impact of climate change has become increasingly evident, and across India, excessive heat waves have become more frequent, and they are now reaching some record-breaking temperatures as well. So the prolonged heat waves are causing the workers in the informal sector loss of income and a disruption in their daily lives, and leading to many unexpected expenses as well. So the product that we developed is to tackle specifically these issues. So a trigger will quickly pay out once the threshold temperatures have been reached. And if the heat has been exceeded for the 2 consecutive days in a row, and as a matter of fact, the policy has been triggered in May in the city of Ahmedabad, where temperatures reached 46 degrees this summer. So around 2,000 women have received payouts in a matter of 2 weeks, but we will try to close that gap even further if possible. Climate change is still a very novel concept for many households, and so this initiative is not just about financial support. It is really also about raising the awareness, the trust, and raising education in all the alternative ways we have to adapt and mitigate the climate risks. So the women protected by this transaction have already experienced a very positive impact in their lives for our partners Mahila Housing Trust. So they're a grassroots organization in India, and the way they help them is that they recover housing risks. Well, they are connected with poor infrastructure in the slums, so they have many initiatives such as painting the roofs in white paint, reflective paint, to then reduce the heat inside of the habitats. And they also had many initiatives to help with the sanitation as well. So these women, they already trust MHT, and now as our partners, it is our turn to earn the trust as a reinsurance industry as well. Moreover, we had support of many other partners as well, and one of them was this Howden Foundation before, but now known as Humanity Insured, because it is a multi-stakeholder initiative backed by all of the insurance industry and offering a premium subsidy for the women, making this financial transaction even more accessible in the communities. So this means that more women can now afford to protect themselves against uncertainties that the climate change brings. And we do believe that communities, once empowered with these financial tools, can really transform their lives, their families, and their futures. So these women are not just beneficiaries in our eyes. They are active participants in a system that really values their contributions. So by working together now on the next iterations of the index and the product in 2025, we really hope to create an even better product and to create a safety net that will be a benefit for everyone involved. Thank you.
Thank you very much, Ariana, for that case study. Another example, I think, of just sheer innovation, which effectively demonstrates a number of things, which is this bridge that we can make between climate and health in a very practical way, and particularly for communities, as I said earlier, that one would traditionally not think, are accessible. But I also think that there is something there about that conversation in terms of these are communities that are feeling the impacts of climate change. When we look at our world, right, there's also an obligation to be very creative about the solutions that are also being offered to these communities. So I'll take a slightly different angle and come back to you, Alessandro. And I really now want to turn to the Vietnam case study, because I think that that's also quite interesting when you think about the transition and the energy demands that we're also facing, again, dealing with the impacts of climate change. So again, your insights in terms of the Vietnam case study.
Thank you, Eko Shui. We've been looking in our Generali Global and Corporate and Commercial portfolio, and we have analyzed and presented some use cases in the report. But here we would like to focus on a specific one that addressed the topic of clean energy and clean and affordable energy. Because while it's true that we all need to adapt to climate change, we also need to make sure that we can mitigate its effects. A key strategy for that is to promote investment in renewable energy. And I'm pleased to highlight the significant potential and challenges of wind power in Vietnam. With some of the best wind resources in Southeastern Asia, Vietnam is ambitiously targeting to increase its wind power to 27% of its total capacity by 2050, representing impressive growth of over 1,400% from its current installed capacity. However, we know that the performance of wind farms can be affected by periods of low winds. To address this, the insurance cover can provide financial protection during this time, encouraging further investment in sector and aiding Vietnam's transition to renewable energy. The policy in place aims to cover wind farm against low production due to lack of wind. It uses a parametric insurance model which relies on historical hourly wind speed data to calculate the average annual production. If the calculated production falls below the predefined trigger amount, a payout is made, and the payout is determined by the difference between the trigger and the actual production, multiplied by the predefined price for megawatt per hour. For example, if the production trigger is set to 1,000 megawatt per hour and the actual production is only 900, the policy triggers a payout based on the shortfall. This kind of coverage protects renewable energy investors and protects developers, encouraging critical investment in renewable energy. These investments are essential for meeting the targets of the Paris Agreement and reducing reliance on coal, which in turn help safeguard the health of vulnerable communities. In conclusion, supporting wind power development in Vietnam is not just about achieving renewable energy goals, but is also protecting public health and ensuring overall a more sustainable future.
Thank you very much, Alessandro, for that example. Again, very practical when we think about energy, and as I mentioned, the transition, right? What does it look like to support that transition in a very practical way? And I also particularly liked your last point, which is not only about energy, it's about the fact that if people don't have access to energy, they can't do basic things, right? So that also opens up a tremendous scope in terms of innovation as it relates to applicability of parametric insurance. So we've now listened to Sarah, Ariana, and Alessandro, who have in some ways made it very easy, but very complex when we talk about parametric insurance. But that is the purpose of this report, right? Is to give people, or start to give people a sense of, you know, what we are talking about in terms of parametric, but also its applicability and the value that can be delivered. But again, drawing back on my earlier comments, a lot of this is about collaboration. So I want to turn to you, Lauren, at UNDP, to also get some reflections on you from the perspective of a development actor. It cannot only be the private sector going at this alone. So your thoughts would be appreciated at this point.
Thank you so much, Echo Sway, and I want to thank all my co-panelists for those really excellent examples of the role of parametric insurance in supporting the Sustainable Development Goals. Basically, development organizations act as a bridge between governments and insurers, and they help shape the ecosystem of supportive market functions, policies, and regulations. For example, many countries do not actually have the regulatory frameworks in place to allow for parametric insurance right now. So that's one of the things that UNDP has been supporting governments to build those appropriate regulatory frameworks to actually allow parametric solutions to be in place in the first place. We also provide technical expertise to integrate insurance and risk financing into development programs and policies, improving the overall insurance ecosystem and creating those market-enabling conditions that really enable the insurance industry to come in and create these policies. We also support governments in developing effective payout management processes to ensure that when payouts are made, resources are effectively channeled where they need to go to facilitate that rapid recovery. For example, we work with governments to develop contingency plans, which detail how a potential payout would be channeled to effective populations and make sure to map the institutional structures needed to deliver on this. But I'd also like to highlight one of the partnerships that we actually have with the Insurance Development Program, Insurance Development Forum, which brings together many of the insurers that we have here today, and actually is working in 20 countries to deliver some of these sovereign risk finance solutions that build financial resilience to climate risks, many of which are parametric. And this model blends the expertise of insurers as well as the development expertise with UNDP in creating those market functions, policies, regulations, as well as building the capacity of governments to be able to understand and use insurance and risk transfer. So with that, I invite all of you to download the paper. I think that this offers excellent collaboration and shows how insurers and the development sector can work together to deliver these solutions where they're needed most. So back to you, Ekosway.
Thank you, Lauren. Really excellent interventions there. And so, as I said, we started off with the objective here was to provide you with very practical insights when we talk about parametric insurance and how is it being deployed. But I want to step back a bit for a few closing reflections, which is that we heard earlier the urgency around the challenge that we are all faced with when we think about protection gaps, the discussions that are happening around insurability, the need for innovation, right? And parametric insurance offers an opportunity to be able to address some of these very big themes. It's also an issue of relevance, and I think that this goes relevance for public sector as much as it is relevance for the private sector. Relevance for the public sector in bringing forward that conversation around risk in terms of how we force better management of risk. And also from the private sector in terms of the innovation that is also required to develop the solutions that are needed. So I really want to thank all of you for your contributions, because ultimately it is to point to the fact that despite the conversations that we are seeing in the broader ecosystem, there are things that we can do and there are things that are happening. So I want to again congratulate the team from Generali as well as UNDP for pulling together this report, the colleagues who have invested the time and resources in pioneering innovation when we talk about insurance, and really acknowledge your work within this space. So again, I encourage you to reach out, ask questions, engage with the industry around this topic, and get involved, and let's try and shape and expand the solution space. So with that, I would like to thank everyone, but also invite Lucia Silva, Generali Group Chief Sustainability Officer, to offer her closing reflections.
It's an honor for me to close this great session on parametric insurance. I think this is a fantastic example on how much insurer can be responsible. And it's an example of sustainability in practice. And I would like you to really focus on 3 key words as a takeaway. I think that today we have learned 3 main stuff. The first one, we need to be pragmatic. There are real people, there are real problems, real risk, but also real solutions, and we have to go for it. The second key word for me is collaboration, and it's collaboration. And no one is enough, no organization, no institutions, no big investor is enough to solve the big problem of climate change, and we need to collaborate, to join together. And third, let's be stubborn optimists. We don't have time to be pessimistic. We don't have time to think about if. We need to focus on the how and by when. And I think that today we provide a real great examples on how much we can be pragmatic, we can collaborate, and we can be optimistic in finding good ways to have an impact on people and the planet. Thank you very much for being part of this journey.